Good evening, everybody. Welcome to this session about the candle pattern entries. Hope that you all had a wonderful week. Okay, so good evening, Lim Chai, everybody. So welcome to this, and let's start. 9 o'clock sharp already. We had this non-farm just now, and the data came out to be dollar positive. But anyway, let's go and focus on what we need to do today. That is talking about the candle pattern entries. Okay, so for us, I want to keep things very, very, very simple. Over here, there will be only 4 types of patterns that we are looking for. If you are looking, your focus is into buy. Okay, that's why I said every time when we say bullish, we're going buy. This is sell. Okay, so guys, if you have any questions, right, just type as usual, type it. And this whole session is recorded, and later on I will be posting this on the YouTube also for you all to practice. Okay, so I'm going at normal pace over here, and if I don't see any questions, I will go a bit faster already. Okay, so basically we're looking into 4 patterns over here. The first two is the bullish patterns over here, bullish engulfing, and then that's this morning star. And then for the sell patterns, we have bearish engulfing, and then only the evening star. So I want to keep things very, very simple. This here is a 2 candle pattern. This is a 2 candle pattern. Over here, this is a 3 candle pattern. That means you'll be looking at only 3 candles over here. So this group over here, when it hits a support area, we're looking for buys. This group over here, we're looking for sells. Now, I have also received a lot of questions with regards to these patterns. Where should I use it on H1 or should I use it on H4? The answer is very simple. If you want to keep risk low, you do attempt all on H1. H4 is only when you absolutely need to take this trade. Like for example, if you see, when I mention anything like that, every single high is a possible last high, or every single low is a possible last low. In this kind of situations, yes, you can take H4. And then if you understand wave trading better, if we are at the 5th wave, of course, taking H4 would make sense, that kind of thing. And if it's a corrective wave at the end of the 3rd wave, then it will make sense looking for the H4. So at the end of the day, where is the price structure, that will determine. But if you are still new, my recommendation is just go and focus on just the H1. Okay, so let's move on. Let's look at the bullish engulfing patterns over here. This is what we want to see. Only prices coming down, hit our area of interest. Now, area interest here are the areas that I give you all in my report. Okay, very clearly I said. And then when it hits that particular area, focus on what do I say? I say look for bullish patterns or look for bearish patterns. So in situations like this, if I say give a certain area and it says look for bullish patterns, that means you're looking for bullish engulfing patterns or the morning star. So let's focus first on the bullish engulfing patterns here, right? So you have the price coming down over here. Now, this is crucial, is that as it comes down and it can touch or it can come near our area, and then you have a black candle forming over here. Okay, and then it's followed by another white color candle. That means this is a bullish candle. Okay, so this is a bullish candle whereby the closing price. So this is the opening price. This is the closing price. Now, if it's a bearish candle, this is the opening price. This is the closing price, right? And this is the high. This is the low. This is the high. This is the low. Okay. So the most important thing over here is that the closing price close higher than the opening price of the previous candle. This is the most crucial thing. Now, you must understand this concept over here, because later on, I'm going to give you some situations where it's not as straightforward. So I need you to really understand and see. Okay, so the key point over here is that this particular candle over here, which is the B candle, the closing price closed higher than the candle's A's opening price. Then you have what we call a bullish engulfing pattern. Okay, now if the candle line develops and it wraps around the previous what you call, if it's able to if it's able to close higher than that, this is what I want you to see. This is the high, right? If it's able to close higher than the previous session, even better. That means even it's able to close below this high, this is even a better thing. Okay, so the most basic is just wrap around over here, right? But if it's able to close above, that's why I say even better, the entire price session candle, if it's able to close above, this is what I would say a stronger one, a strong bullish engulfing pattern. Yeah. So let's look at one thing we need to dive in to get something in that. Now, the criteria here, the latest candle must close above the opening price of the previous candle, right? This is the criteria around. But one thing I want you to understand is that if prior to this, we have big candles like this, big ones, and then suddenly it comes to a very small one like this. And then you have an engulfing pattern. That this is what I call high risk. And usually I do not take them unless that I've already made a lot of profits. I want to take, I want to take some risk. I will go for it. Because what I want to show you is that you need to understand there is a change of momentum over here. All right. So there's a change of momentum here. Here, there's no change of momentum because look at the sellers. Huge, a lot of selling. And then after that, little selling, little buying. So like this, it's, I would think that it's a bit risky unless you have big selling, small selling, and then this big one over here. Then okay, because if you have 3 or more, the more the better, obviously. Okay, it's not to say we cannot take these trades for the small candles, but most important right now is to reduce your risk. This is the purpose today. All these small things I want you to know. Okay, so if we have small candles, not to say cannot, at least make sure it's just not 2. We have 1, 2, maybe 3 candles, 3 or more small candles, then we can consider. But if you have something like that, big selling, and then the small selling, and then after that big buying. Now you look at the size of this candle over here, it's about the same size as here, right? Okay, just roughly. If it's able, this candle right over here, right, if it's able to close the size about 3/4, I think it's more than enough of these big candles over here. If it's about 3/4, it's more than enough. You don't need to equal also, but 3/4 of it, then we are okay. Okay, so you understand this part? Okay, that's the question over here. Each candle interval is 1 day. Now it depends what time frame you are looking at. Okay, Kelvis, over here, we are talking about, okay, now our entries, we are talking about 1 hour charts, right? 1 hour charts over here, just to let you understand. I think you still new. Look at, these are the time frames available. This 1 minute, 5 minutes, 15 minutes, and 30 minutes, 1 hour, 4 hour, daily. So weekly, and monthly. So what does all this mean? That means if it's monthly, every month is one candle. Is represented by one candle. This is every week represented by one candle. Every day, every 4 hour, 1 hour, and so on. Now, for our entries, what we are looking for is on an hourly basis. That's why I said 1 hour. So at the end of 1 hour, there will be one fresh candle. So for example, right now, we just had started 9 o'clock. Now, this is a 9 o'clock candle that just opened right now. So at 10 o'clock, this candle will stop moving, and then there will be another candle coming out. So to work on this, so the best is, because right now we are focusing on entries, right? So our entries, we are looking into H1 or H4, correct? So use this concept over here. Know one thing, because I want you all to be used to understanding price action. Price action is about differentiating the number of buyers that's in the market. And these are one of the few things that, very simple way to understand. You say, oh, there are a lot of sellers. So yeah, there are a lot of sellers. There are a lot of sellers. Sellers have reduced. Okay, we understand that. But the buyers are not really, buying in full force as opposed to here. You see? So then these are the things that you need to question. Because this is just, maybe these sellers are just resting. It's lunchtime or whatnot. It can be the same thing, So this is what I want you to focus on. So big candles, big candles, big candles. Oh, okay, small. Okay, that's a good thing. But weak buying, no. But if we have weak candle and this one is still let's say this is also a black candle. Okay, so this is a small one. And then we have a bullish candle like this. Then no issue. Because they have already shown, like if it's an hourly chart, for 2 consecutive hours, there just aren't enough sellers around. Then that's good. Okay? Okay so far? So, okay, so if there's no questions, I'll continue. Now, there's one question over here. Are we still using hybrid like H4, M50, and so on? No, Ben, this is a totally different kind of entry system right now. This is a standalone, yeah? Okay, more questions by Albert. If the white candle has a very high wick, but body still covers the previous candle, do we still go for an entry? Okay, this is a very good question. After we'll come to that. I will answer this in a short while when it comes to special, what do you call the special patterns. Okay, that's why I said this one is just not something that I will take out from the textbook and then just follow like that, because there will be situations whereby the candles look a bit different. Okay, so we'll cover that in a short while, but we understand these 2 concepts. So these 2 concepts, you're okay already, right? Okay, now look over here. These are the things I want you all to see. Yeah. And now, so I believe, Albert, that your question falls under over here. Now, the criteria, that's why I said the most important thing is first to understand the criteria. The latest candle must close above the opening price of the previous candle. So with this, then we'll see. Now, notice one thing is that whatever it is, ensure that the candle, the triggering candle, is either giving you the lowest point. Okay, the triggering candle must give you the lowest point, or the candle just before the trigger candle is the lowest point. Either these 2 will work. So in the situation whereby I have something like this, then this is not an entry. Okay, so but this is an entry. Like this is okay. So you must make sure the candle, either the triggering candle or the candle beside the triggering candle creates a low point. Okay, they can be equal low, no problem. Okay, so far okay. Now you can see over here, this is the black candle, right? This is the opening price. So the opening price. So you can see that this is the lowest candle. It covers the black candle. So this is a trigger one. This is another one. Now this is your question. If it has a very high wick, but body still cover the previous one, do we still go for entry? The answer is no, and also yes. Yes, when this closing price over here covers at least 3/4, no problem. Okay, it covers at least 3/4. Rough estimation over here, at least 3/4, because I need to have enough buyers. Anything less than 3/4, no. Anything less than 3/4 the size of candle, the answer is no. Okay. Now so this one was the lowest one, and then it closed higher. Now these are situations like this. You see, this is the standard one, then no issue. There will be times also, oh, people say, hey, this is a small body. What do I do? Because the body is not big enough. All the books, whatnot, they're all showing big bodies. But no one thing is that this is where the price went, and this is where the price closed. In other words, what you're looking at is actually one big fat candle right over here. Okay. So if you put it that way and said, oh, okay, this is big right now. So learn to see this first, understanding must close above opening price of the previous candle. So now you have all the samples over here. Okay, now one question coming. If the bullish candle is very strong, where it covers 2 or 3 previous, okay, still good to enter. Now these are all very, very good questions. I'm happy you're asking this kind of questions, because I know one thing is that you have been trading already. So that's very, very good. Now one thing here to answer your question direct, let's say your question is something like that. You have a bearish, okay, let me change it to black, will be easier. Bearish candle, something like that. Bearish candle, fine, no problem. You have a situation whereby you have this like this. The question is going to enter or not. Now the most important thing right now is that usually when it's too big of a candle like that, right, I won't enter straight away. I would prefer to see what is the next price action. If it's showing corrective structure, I will go for it. Okay, so if it's just something like that, oops, press too fast. If it's not really that big, okay, something like that, not really that big, then okay, this one I will still take it. But because they are small candles, big one, but relatively okay, the size is not really that big. The ones that I really don't like is something like you know, on your screen. Let me just put on the screen. Just hold on. I make this smaller a bit. Okay. Situations like this. Let's give you real life situations. Okay. Let's say this, we take this bearish, this is bearish, right? Okay, so far. Now let's say if we have a white candle that goes until like that, I'm not really that keen to enter over here, because number one, look at your entry, look at your stop loss, your risk is so big. So I'm not that interested to go something that's so too big, too far. Okay, so there are situations like this. I said, nah. So if they are relatively about, let's say I give you something, make it easy. If this is the size, right, If it's still about, if the small candles like this is still roughly about 2 to 1, I will still go for it. Anything more than that, I will have to see that situation. And you can only understand this particular movements only when you have looked at enough charts, taken enough entries, then you will actually see it already, start to understand what I'm trying to say. But basically, anything like covers 3/4 of the screen, right, is something that I'm not very that comfortable already. Okay. So I hope that answers your question. So this is okay so far. If it's okay, let's look at the thing. Now, this is something that I say, I do take this kind of entries, but these are what I call higher risk entries. And I only do this if I absolutely need to enter this trade. So it's the same exactly concept like the H4 concept. Okay. So what is this? Now, this, if you can see, this is our standard bullish engulfing pattern, correct? Now, if you look at over here, this low over here is not as low as this low that was created before. Okay. But if this is an area that, if in the report we said that, oh, this is a very, very important area, there probably be something's going to happen over here, bump, bump, bump. Keep on saying that already, right? So it did not give you any engulfing patterns early on, but the second round it came in. If it is relatively not really that far away, just looking at it, say it's not really that far away. They can be of equal low or just a tad higher. This is too far already for me. Something like this, you see, this is not really that far away. Okay, your eyes need to look carefully and say, oh, this is just a bit higher. Now, situations like this, you can take this trade. There is no issue. And if you have been following the reports, you have seen a few that were like that. In the early days, I put it as part of the entry, but later on I took it out because I felt that I need to actually cover it over here with you guys. And then you have seen it already. Then we slowly introduce this entry system into the report. Okay. So this is what I call high risk entry. What you can do when it's known as a high risk entry, you can always reduce your risk size when you enter this. This is one simple way for you to deal with it. Okay. So remember, or whatever entries that you see can be done on H4 and H1, but better still H1. Now, if you look at our report over here, now this was on the 22nd of June. These are all this year. Okay. Now, in the report, I said, look at this area. Later on, I will explain to you all how to look into this report. This area, what does it mean? Plus, minus 20 and all these kind of things. Later, we'll show that calculation to you all. So basically, this was I took a snapshot of the area but what I want you to focus is this. Okay, we're telling you to buy, right? So at that area, that 130 area, which is here, right about here, right? That's where it started to trigger. So as long as it doesn't fall below $20 for the gold, so anything from 1800 to basically 1829 to 1800 is still workable for me to take the gold, right? So when I looked into this area and said, oh, okay, over here there is an engulfing pattern, right? And then this one close above here, number one. Number two, that is close, it's higher, it's high about 3/4 of it, so no issue. Number three, look at the size or the rest. Including the wicks, right? They are about the same. They are about the same. Only this guy's a bit bigger, but never mind. The last few, they're about the same. So no issue. You can take this trade. So that's why if you take this trade here, you probably have a 2 risk one, and then you get back about 2.5 just looking at this one. Okay. So let's move on to the other examples. Now here, this is the one that you asked. So if it's like covering or 1/3 of the screen, right? Usually I may not jump in straight away. This is a situation like this. This is a very strong one, covering a few, right? If you jump in straight away and you will see this is your risk a bit too far over here, here, and here. You can always wait for a retracement. Put on your Fibonacci, wait for retracement, then only go for it. You know, anything lower than here is a good thing. You can always use this way. But here, this report, like then again, I said, you know, it triggered at our area. Just have a look at it, and then that's where it starts pushing. Then you go. Okay, so for this situation, you can take a retracement and then you go. Right. So this is an engulfing pattern right over here. Now, this is another one, right? Whereby it has broken the channel top and then look for 9560 and then we go for the buys. Now this is also another one whereby look, this is the bearish one, and then in the center, then after that it create one low covering both of them like that, easily dwarfing the both of them. So here we have that trigger point already. This one just close just above. Now, when I say close above, all you need to do is just 1 pip. Now, what is 1 pip? Now, all of you have this, right? You can see these are all 5 decimal points. 95999. Okay, so and then you have another 2 over here example. Now, when we talk about pip calculation, I am only referring to the 4th decimal point. Okay, so if I say 1 pip, that means movement here. So if you were to take 5 decimal points, that means 1 pip equals to 10. Okay, understand? So because this is known as a pip, this last one here is known as a pipette. It's like your what do you call the microseconds inside your seconds, you know, your stopwatch. So when we do calculations in pip, always refer only to the 4th decimal point. Okay, after I'll have more examples to you. So all you need to do is for this closing price to close higher by at least 1 pip. Okay, so example, if this is the high, this is the high, H-I-G-H. This is the high of this candle right over here. All you need to do is for this bullish candle, this white one, to go 1.00102. Okay, that means move up by 1. So that means close above and close there. It close 1 pip above, bump, trade trigger, we go. Okay. So I hope that's clear for you guys. So this was a trade on the dollar Swiss. It was a retracement trade that we were looking for, and then it just went. Okay, after taking our area. And you can see this one, if I'm not wrong, if you look at this report, I think that was a 10-to-1 return. Oh, it end up this whole thing just keep on moving higher and higher. Now, natural gas right over here. Natural gas. Oh, now this is what I call the higher risk one. Okay, look at this is the low. This is also a low, but not as low as this guy, right? So if this area is an absolute area that you need to take, you know, you feel that, you know, you are based on your experience already, you think, oh, this is a good place for you to take. Now you can take this trade, but always know one thing, this is what we call higher risk. Yeah. Okay, so wait, there's a question coming in. So it's good for me to cover as, you know, the charts that you're asking the questions. There's one question from Ashwini here. Hey, Justin, I'm sorry. In order for you to enter a trade roughly, how many candlesticks do you analyze? If I give you an area, let's say an area like this, $8, right? And it comes to that $8 area, all you need to do is this candle come to this area or zone. After explain to you the zone. It hits our area or zone. So like, for example, right, this is $8. $8 is an area that I gave you all. And then so you need to do is look at 8.2 or 7.8, right? 20 cents for the natural gas. So anywhere between 8.2 and 7.8, you see this tip here, this candle tip over here, this one over here. Let me change back to black. Now this candle tip here touches at least 8.2. Okay, and it mustn't go lower than 7.8. That's the zone inside there. And it gives you these candle patterns, go for it. Understand? So you don't need to know how many candlesticks and stuff. Just follow this concept. It touches our area. The moment it touches, it gives you that signal, go for it. If it touches, it doesn't give you, don't enter. And as long as, like, for example, this is a buy trade, this wick here don't go anything lower than 7.8. This trade is still valid. Anything lower than 7.8, do not go. Okay. Okay, that's a question here by Lian. After it closed 1 pip above, immediately go in, need to wait for retracement. Now, this is a very good question. Now, if it's a very big candle, like I told you, like let's say example, okay, let me give you example. This is a good example. Now, this is, if this candle is somewhere this size, okay, until over here, I would just enter straight away. But look at this candle. It is so big, it's dwarfing. It closed like 1, 2, 3, 4, 5, 6, and closing 6 is fine. But look at the size, it's just so big. It's bigger than anyone else, right? In this kind of situations, I usually don't do an entry. I won't do a market entry. I will immediately go in. I'll wait for a retracement. Okay, so I will put the Fibonacci, put the 0 over here, put the 100 over here, and then I look at all the Fib levels. This is probably the 38.2, and then I will enter at 30.2 or the 50 or the 61.8. Okay, and then we also have the 71, but usually it's not that low unless we're talking about structure. So anywhere between these levels, I think is still workable for you guys. Okay, so big candles only I will go. I will wait for retracement. Small candles, I will just do market entry. Yes, I don't want to be sitting down there waiting and waiting for the trade to happen. How many entries we should enter and how to set TP in order to capture? Okay, how many entries is you have to decide yourself. If you want to have multiple exits, let's say your risk is 1%. You know, if your risk is 1, so you have to plan your game over here. If your risk is, let's say, from here to here, this whole thing is your risk, right? It's 1%, and you think that, no, I want to do 3 entries. I want to do here 1 entry here, and then 1 more entry here, 1 more entry here. You can always split it to 0.3, no problem. Or you want only 2 entries, 0.5. If you think that 1 entry is enough for you, just take 1% entry and then just go for it. Okay. Do y'all, just want to check with you all guys, do you all know how to calculate risk or not? Say let's say my risk is 1% or 3% or 5%. Do you know how to calculate risk? Those that don't know, just let me know. Just say, put no, 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 no. Okay. Now, now there are some people that say don't know how to calculate risk, and I know these people are trading and their accounts are not small. So yeah. Okay, afterwards, okay, let's just do the risk calculation right over here, easier. All right, you guys, very interesting people. Okay, so let's just take this example. Let's find an entry. Okay, let's just say that this is our entry over here. This particular area here is our entry, right? And then this is a if we follow this, this will be a bearish engulfing pattern. Everybody okay so far? Okay, so let's assume some situations like this. Let's say you have an account, your account size is let's say 10,000. This is a very good number to start off with. So this is your account size. Okay, now okay, now here, right over here. So what is the high, and then what is the low? Okay, so what you can do is point this particular thing, you know, this crosshair, put it to here, this candle, and then you can look this area over here. There's a list out over here, or you can look over here if you cannot find it. So that risk there, the high is 0.64280, right? And then the low, what's the low? The low is 0.64099, correct? 64099. So what you can do over here, next thing you know, this is a sell, right? So sell, you have to add spread into your calculations. If you're buying, you don't need to add. Okay, when you sell, okay, whenever you sell, your stop loss and target profit, you must add the spread. Okay, whenever you sell. Whenever you buy, whenever you buy, you do not need to add spread to your stop loss and target. Okay, so far? So all you need to do is go to this particular. So okay, now we look at over here. So just now we had your high as 64280, right? 0 point. This is your high. Your low, that means if I enter over here straight away and I put my stop loss right above over here, that's the reason why I'm doing this. Okay, so my low right now is 0.64099. Okay, so can you all tell me how many pips is this? How many pips is this? Okay, you take out 0. Cancel all 0.64280. Oops, 0.64280, and then you take away 0.64099, and then that equals to 0.00181, correct? So we are only referring to the last two over here. So what is it telling you? Our risk over here is 18.1 pips. Okay, now because we are selling, we need to add the spread, correct? So let's look at our spread over here. Let's say I want to sell. What is our spread like? So the spread is roughly about 1.3. Okay, 1.3. So we add back that 1 plus 1.3 over here. So it becomes 19.4, correct? Okay, so now we remember that we have a 19.4. So we go to this one website over here. This is what I will recommend to you all. Okay, I'm bringing this over right over here. Okay, so this is the website, myfxbook.com, Forex calculation position size, right? So you just need to put to your currency. Your currency. So your currency here is Aussie dollar, right? Aussie dollar. So because you know, every single pairing, they have different lot sizes, you know. So your currency is in US dollar. So your account size, 10,000, right? And then let's say I want to take 1% risk only, 1% risk of this trade. I want to do 1%. My stop loss over here. So what was my stop loss value? Remember? 19.4, right? So, okay, I'm putting over here 19.4. And then, and what you can do is you just put a calculation over here. So if my risk over here, that for me, if I take a 1% risk of the $10,000 account, that's 100 US dollars, right? 100 US dollars. So all I need to do is just key in 0.52 lots. So I put in my new order over here. I put 0.52. So, and then with my stop loss just now, I calculated inside there, adding the spread. Okay, then it's done already. So your stop loss would be, what is your stop loss? You all remember or not? Your high over here, this is your high, right? So your high is 64280, 0. Okay, and then you plus 1.3 pips. So 1.3 pips over here. So you get an answer of 64293. So your stop loss over here, you key in 0.64293. That's your stop loss. And then after that is for your target, also do the same thing. You have to key in your stop loss plus, you know, including the spread inside there. Understand? So that's how you get your 1-to-1 exactly, or 1-2-to-1, or 3-to-1, or whatnot. Okay, so far, I hope this this little calculation you can understand already. Okay, so let's go back to the presentation over here. The spread purpose, that is the income of the broker. Okay, the income of the broker. That's why they're providing these platforms. They're providing all of this to you guys. So that is their income. Okay, so this is a Go example. Then let's the Swiss, I've talked about that. Now this is what we call a higher risk, right? Now, for this one, this is also a high risk entry. It's an area that we definitely wanted to trade. So this was the June report again, and then this is the engulfing. So this is what I call the standard engulfing entry. All right, as you can see, the candle size is, everything is big, so it's okay, you can go. Now this is in Binance. Now you can see this, look at the size of these candles. It came to our level at 290, 250. This is with what target. This is a recent one, and then we were looking at the 290 also. So basically, I know somebody who just now said don't know how to calculate risk, right? He took the trade from here and exit from here, and he said don't know how to calculate risk. Yeah, so you expect me to believe that, yeah? So now you look at the size of this candle, bigger than here, okay? And it's about the same size and here. This is what we want to look for. The equal, you know, all this selling coming over here, and then the force of the buyers are equal to the sellers. This is where we will go and take this trade and then just write the whole thing. Okay, so far? So there are a lot of examples, but they all look the same. If you were to follow our reports week in, week out, you would see all this. They happen every single week. So every single week there are trades. You just need to learn how to put on the alerts. For the how to put on alerts, you just go back to your Telegram. When you first started, go and see over there. There is this a PDF to how to set your alarm to remind you when your trade has come to our area of report. Okay, so this is your trade for the bullish engulfing for the one of the trades for Binance cryptocurrency. Now, next is the bearish engulfing patterns. So you have price going up, coming to our area of interest, okay? And then you have a bullish candle followed by a bearish candle over here, okay? And what needs to happen next is that the candle, so this is the opening price, this is the closing price, this is the opening price, this is the closing price. You have the bearish candle over here closing lower than the opening price of the bullish candle over here. This is what we call bearish engulfing. Now, if this closing price is able to close lower than the low of this candle, I would call it even better. That's why even better, the entire prior session's candle, the entire candle, if it close below on it, better still. Okay, so let's look into some of the examples. Now you look over here, this one, it created a high, then it came down, and then after that it started moving, and then there was a spike up over here. This spike over here is a higher high than the previous high, right? So what it did was that it just closed. Now why this is still okay? Because look at the relative size of this candle over here. This type candle I will just enter straight away, because the relative size of this candle, even though it's engulfing everybody, a lot of candles over here, the size is not really that big, not something like this. I will wait for a retracement. Okay, but this is not really that big, right? So if it's not really that big, created new high, then no issue. Take this trade over here. This was one of the trades that we took, and then and wrote the whole thing down. This is really more than 10 to 1. Okay, so this is one nice one over here. So let's look into other examples. Now this is another one that we took. So same case over here. This is the high, it spiked up higher, and then it closed. And look at the size of the candle, same size as this guy, right? And then that was the down. This was a short-term trade because we were going anti-trend. Okay, so this was in the May report. And then this is the Dow Jones. As you can see, everywhere is the same concept over here. These are all the trades that we took in according to the report. Actually, I'm just taking some examples. There were so many trades, right? So the push up was pretty strong, and still maintaining my level of 33,500 to look for bearish price action, because I looked at the wave, it's pushing up over here. It can do a push up and a trick. So that was it. That's why I wrote this one. And 34150 needs to be defended for the best. So basically it's up over here. So over here you have an engulfing, bearish engulfing, boom. So this is what I call strong bearish engulfing. You see, it closed much lower than the low of the previous candle. That's why you can see it's much better, and it goes. Okay, this is another one. This is natural gas. The moment it hit our level over here, we were looking into 950, 980, and then $10 to look for the sales, because that was already a strong uptrend. And look over here, sometimes market is kind to you, and then they don't let you wait that long. So the moment you had an engulfing pattern right over here, right? You see, look at this engulfing pattern. Now, a lot of people will be asking, hey, this candle looks smaller than here. Look, this is the highest point, and if able to close below the highest point, also you can go already, because is what is happening. Price is pushing up, and then after that, equally strong pushing down. That's the reason why, yes, the body is small, both the bodies are small, but the strength of the push, that's the spike, that's the one that matters the most. And if you see, this is basically, if you think nicely, the price is actually selling off from here, coming down all the way to this point. So this is actually the size of the candle from here to here. Okay, it's because the seller started giving up over here. That's the reason why you see this turn into a smaller candle. But most important thing is that it closed below And then one thing, if the candle closes below and there is just no hair, no extra wick like this, it tells me, it tells us one thing is that the sellers are very, very strong. They are closing at the lowest area that can be already. And that's why there's no surprise this came in. Okay, but if you get something so small, something like this, then I'm not really that interested. Something so small like this, because this is still a considerable size compared to this guy also and this guy, right? So if you get something small like this, no, I'm not that interested. Like this, okay, no problem. Okay, so these are the things that you need to slowly see. If you don't understand, no problem. Watch this video again and again and again. And then going forward, right, we will be updating the results, and then I'll have more of these sessions already. This is the beginning of the supports that I'm going to give, the free supports that we are giving out for you guys. So learn to trade, because the only way you can understand all this, what I'm talking about, is first watch these videos, watch 2 times, 3 times, 4 times. Then after that, you have to actually start taking trades already. Only when you start taking trades, you will learn. And then after that, from there, we do our discussions. When I do all these classes, right, you bring up for discussion, send it to me earlier. These questions, I'll tell you guys, okay, on this day, I'm going to do discussions about our entries, and then everybody can come in, then we can talk about it. Okay, so you can send me your trade discussions, and I'll put it as examples for us to discuss. And then I'll put it on YouTube. You can watch again and again and again. And that's how we're going to continue with this community, make it strong, let you really understand. Okay, we go step by step, because if you are good traders, it is also good for me. Let me know, because I'm looking for good traders also, so that you all have a good career in trading. That's what we want to do also. Okay. Next over here, we have gold. Gold over here, we have the 8th of June or report. This is quite fairly recent. Now we have an engulfing pattern right over here, and then that was the sell down. And you can see this is a nice return, right? This is the 8th of June. And we were looking about 1850, if you all remember this one. Anyway, when you get back, get this video over here, just go back to all these reports that I talked about. Go and see before that, what did I say? Before that, what did I say? And then and then all these kind of things. Okay, so whatever we do over here is really transparent, then so you can understand the whole trade process. So to give you that confidence that learning this stuff can actually make you guys money. Now, this is another one. Now, for this situation over here, one thing is that this is our situations whereby, you see, I have a week over here. I have a week over here, and this week over here is rather long, and that leaves me a bit uncomfortable. Okay, so in this kind of situations, do I take this trade? The answer is yes, if this. Now, if you have a long wick candle, something like that, all you need to do is check this high and this low. I need the closing price, the closing price to close more than 50% of the whole candle. Then I am okay to take the trade. Okay, if you have a long wick, the closing price must close more than 50% of the high minus the low. Okay, that means the high here minus the low. It must close more than 50%. I have measured this. This is just below that 50%. Then that's why this trade we can take. Okay. Now, always know one thing, these kind of things, the longer the wick, there is risk. So you can always manage your risk. If you feel that I'm not comfortable, but I need to take this trade, I can, if your standard entries are all 1%, there's nothing wrong for you to do 0.5%. There's nothing wrong for you to do even 0.7%. Okay, and if you think you have made profit already last few weeks, there is also nothing wrong for you to do 1% or 2%, depending on what is your risk size that you're comfortable with. Okay. So just now I missed out also 1%. That you just make sure if you don't have the access to my FX books, right? So let's say your risk is 1% of one 100 account. So that means, let's say your risk over here is USD $1. I just give you example, USD $1. So if your trade is let's say one pip equals to 10 cents. 10 cents, that means it's 0.01 lot size, and your risk over here is 10 pips. Okay, 10 pips. So that means to risk 1%, you just enter 0.01, because the moment it takes out that 10 pips, you just lose $1. That's how you calculate that risk. So always equate the pip size, how many pips, to the risk. Okay, so okay, so use that calculator. You can see already. When do we set SL to break even? When the price move 1 to 1. Okay, let's hold on now. Let me clear this part. Okay already, everybody. So when do we set stop loss to break even? Now it depends if you are a trend trader or a reversal trader. But at the end of the day is how much you believe. Okay, like for me, I just give you for beginners, right? So this is my entry over here, and then this is my stop loss, right, over here. So this is my entry, right? And then this price goes up to like this, exactly to my entry level. The resize is about the same. That means I already profit 1 to 1 already. I risk 1, I profit. No, this is the risk, this is the profit. Okay, I risk 1, I profit 1 already. And then what happens next? Price stalls around this area. Price stalls around this area. This will get me nervous. And usually this kind of situations, I will probably start taking out some profits. So that, let's say I put in 5 lots of entry, I may take out 3 lots or 2.5 lots. I do risk it out already and shift the stop loss higher over here. My stop loss is here, right? I shift to higher at say 11.4% over here. My stop loss over here. So if hit me also, I won't fully lose everything, because I have taken 2.5 of a lot, 50% of trade out already, or 60% of the trade out already. I've taken that out. So this is one way. Another way is that, if you notice, I've given you bigger lot size before, like for example, recently I'm looking for the dollar candy to come to 134. And if you remember, when we have natural gas, I'm aiming long-term buy for it to hit 10 or $11 again. And then for the oil, last time when I said I'm looking for $70 per barrel, when that time we were at 120. Yeah, this kind of situations you can set a bit longer, because I've already given you a longer term target. I looked at the whole thing, I studied the fundamentals, you can go. Okay, so this kind of trades you can go. But if I just give you very, very short targets like that, right? So you decide, if you're happy with 2 to 1, then you can exit 2 to 1 or 3 to 1, measure from here until your target, what is it like? So you can always take out at here, or 50%, or 3/4, or the full thing. You have to decide over there. Okay, because everybody has different kind of appetite in their risk. Okay, so let's move on. The oil, this was the oil trade. This is another engulfing pattern over here that we took. This is the oil trade. Now that's the one I talked about here. That was the sell, right? And then after that, we were looking into hitting that 70 level. So these are the situations that you can keep a bit long and try to hold on to it, and go as long as possible. So these are the types where you have those big returns already. Like this is another euro report. This is another engulfing. So this is what I consider the higher risk ones. You see, they are about the same area. There's about the same area, and then we have a bigger selling candle, and that's where it started moving off. Okay, this is I consider the higher risk one. Now this is the three. After this is the three candle patterns. This is called the morning star. So easy to know morning star. Why morning? Think of the sun. Okay, instead of the star, the sun. The sun rises in the morning. So rises, that means you look for buy. And then the other one is called evening star. Evening star, the sun sets, right? So the price is coming down. Okay, so what you need over here is the market's a downtrend, and then you have a bearish candle, and then you have a small candle body. This wick here don't need to be long. It can be just like this. Okay, this one cancel off. It can be a small wick. The most important thing, this guy is really small. Okay, really small. And then the what color also irrelevant. It can be black color, it can be white color. White color, that means it's a bullish candle or it's a bearish candle, no problem. As long as it's a small body, it's fine. So these are good things is because why not? Even if you mistaken this thing, it's a big body, small body, you don't understand, right? As long as you don't understand this two is fine already. So you must have this guy closing above this guy at least more than, if you have this guy closing above here, this is the open, this is the close, this is the open, this is the close, right? So you can misunderstand this guy, but if you see this one closing a bit higher, then okay, this will trigger as a morning star already. Okay, these are three candle patterns right over here. So candle A, long black candle, and then after that, B is a small real body candle. It can also be a doji. Let me show you what's a doji, something like this, where the open and the close price is the same. So it's like becomes like a cross. Okay, so this is also considered small body. Yeah. So after that, what happens next is that it's a small body, and then the C closes above the opening price of candle A. It better still if it close above the entire A, better still. If you can close above, that means the closing price over here. This is what I call better still. I would love this kind of entries. Okay, so look at an example over here. Now, if you start looking into stocks, I have to tell you, when you start looking into stocks, you will see gaps like this. So just treat gaps as also a candle. So this is the closing price, right, of this candle. So it's like, imagine it something like that. It's like so long. Okay, you can think of it like that also, no problem. So this is a morning star, and then it started moving. Okay, so this was the main report for the dollar index. And usually this one, when it comes to Monday, then you will see the gaps. You see, when it comes to Monday, you will see gaps. Monday, you will see gaps. This is most of the time, unless there are big news. Other days, they open and close at the same place. Okay. So this was the dollar index on 30th of May. And then this is also the dollar candy buy. This is a June entry. So we have a spike over here, the small body. This body is less than 50% of even the whole thing, right? And then you have this big one. That's why I said one thing good about this, even you misunderstand also, it's still most of the time you're okay, because these are three candle patterns. But as long as you close above over here, also a good thing. You see this one fulfill. You close above here and you close above here. If you think this is not small enough, so you say, oh, this is not a morning star, and you say, oh, this is a bullish engulfing pattern. It's also fine, no problem. Okay. So now if you have this, most important, if it's a three candle pattern, it must close higher than the opening price of the bearish candle right over here, the second candle towards the left. Yeah. Okay. So, and then we have a recent one over here. This is the dollar index buy. Now, this is a situation like over here. You remember what did I tell you guys with regards to the dollar index. I say finish the correction. It will be one more push up because of the possible rate hikes, right? 1.25% rate hikes. If you've been following my report, this kind of things. These are the situations that whereby you can actually take some higher risk already, because if we have already so over here there was this sell down already, and then you're also now doing this, so you can take this risk and go with it. So this is the 110 area. There, check out bullish price action. This is just recent. I just took it for you. And then I said when it finish this retracement, and then there'll be one more. So this is what actually it did. We finished the retracement, one more. Currently price is over here. So if you were to take this entry over here and exit right now, because I told you the moment break over here in today's report, I said break here, exit, right? Still like a 3-1, and then if you didn't exit, you keep it over here now, I think it's already 5-1. Okay, so these are the situations where I feel that there is a need for me to take it, because the general trend is really an up. I don't want to miss this one. That this is one of those situations. Okay, so you see small body, and then you have a candle closing higher than this one, the closing price. Okay, and it's like more than 3/4, about 3/4 over here. So okay, we can pass this and then go for it. Yeah, so that is the morning star. And our final pattern over here is the evening star. So market is in an uptrend, but bullish candle hit our area of interest, and then you have a bearish candle, and then we go for it. Okay, so you have a bearish candle over here, market's in an uptrend, then you go. Okay, so most important, close below the low of candle, opening price of candle A, better still the low of candle A. And this one has a very small body, even a doji is fine. So most important is closing below here. Okay, so here are the examples right over here. This is one New Zealand dollar that we took based on this report right over here. You can see that. So it goes. This is a nice return. This is another one, small body, and then it goes right over here. Okay, and then if you think that you like to take some risk due to news, right? This is side by side, this is higher risk, but then again, this is a big candle. You need to understand and say, oh, okay, why this candle is okay, because the previous candles are all of this size also. Okay, so but all these kind of things is that once you trade, you can really understand it better already. But this is an evening star right over here from the reports. This is an Aussie sell, same like the New Zealand also. That's why this is a big move down. All these are coming from our reports, basically. This is the June report on the selling of the gold. This one is a doji. That's why this is a nice one. Like, can show you all. Doji means the opening price and closing price is the same. That's why you see one line only. Okay. There's a question here from Mr. Lim. For both the star and star patterns, entry at opening or closing of C. Now, if it's an evening star, you enter at the for evening stars and morning stars, these are all 3 candle patterns. Okay, so you need to wait for the third candle over here to close before you enter. So you need them to close first. You cannot enter at the opening. These are all 3 candle patterns. Okay. So this is an evening star with the doji. And then, okay, so we have covered all the patterns already, right? So now this one is something important and I need you all to know. When we talk about areas, right, we are talking about zones. Because whatever I give you guys, right, is just, what I mean is that it might not come to that area, right? Exactly that area. Because you know, if we can go exactly to the dot, right, it is something. But I mean, it is, you know, the closest I have ever got to an entry is 0.0005 4 zeros and a 1 pipette. That was the closest ever. I've never taken an entry. I said, I enter here, exactly I've entered there. In my trading career, or like how many years already? It's nearing 20 years. I've never ever got that. I think you even have a better chance people striking 4Ds than getting this one exactly to the point. Okay. So note one thing over here is that let's say if your let's say currency we are talking about 20 pips, right? So what does really 20 pips mean over here? So let's look over here now. Let's go to the here now. This, what's happening here, let's put down the number 0.63828. Okay, so it's moving right now. Let's say, okay, let's just say if the report says, okay, when price comes to 63828, look for bullish patterns. Example, I say if price comes to 0.63828, look for bullish patterns. So in other words, the moment price come anywhere, price give you a bullish pattern from 20 pips. Okay, 64028 to 0.63628. Okay, anywhere from here, inside here, there is the patterns, the bullish engulfing, Morningstar, trigger, you can go for it. That's the meaning, plus minus 20 pips. Okay, so you have other examples right over here. The other examples, natural silver is 20 cents. So if you look at silver over here, this is silver. So 20 cents. So you just minus 20 cents from here, plus minus 20 cents from whatever level that I give you all. And etc. For natural gas is the same. Gold and Ether and S&P 500, $20. 20 plus minus 20, like I show you gold. Gold is here. So you just plus minus 20, not 20 cents, but $20. Okay, $20. Gold is a bit different because of the volatility. That's why I put it a bit higher. And then you have Nasdaq, the Hang Seng. These are all this in our reports. This one, because they are 5 figures, so I plus minus 200. Okay, for the cryptos, those cryptos that are single digit cryptos, the value of the crypto is a single digit, then 0.2, double digit $2, triple digit 20, 4 digits, oops, over here, yeah, triple digit 24 digits, also 20, correct. These two are the same, because I've done some research on it already. If 3 and 4 still maintain at 20, okay, and 5, this is 5, and then go like this already. Now if there is a decimal point inside there, just go back to decimal points, right? They follow the forex calculation for the cryptos. Okay, 0. The 4 decimal points, the last 2, you can always use that. Okay, and if there are more different kinds of prices, just let me know, and then I'll see, and then let you on. We will deal with it. So this is what we call the buy and sell zones. So it come to our zone, plus minus, from that value trigger we go. Okay, now for the stop losses, how do you put your stop loss? Now for forex, this is 1 pip above or below this one. I have to do a correction. 1 pip above or below. Okay, already here, I'm dreaming already. Okay, now stop loss below the low, or below the low or above the high of the trigger patterns. Okay, this one I have to do some correction. Below the low or below the low or the high of the trigger patterns. So like Forex, use 1 pip. No, this is cancelled. 1 pip. If it's a stop loss, 1 pip below the low for the buys for all the buy trades, and 1 pip above the high for all the sell trades. The high of the patterns. So for example, this is the trigger pattern. This is bullish engulfing. Okay. And then this is the bearish engulfing. Oh, sorry. Oh, I clicked the wrong button. Okay, bullish engulfing, bearish engulfing, and then okay. So just over here, 1 pip below, 1 pip above the lowest point. If it's a 3-candle pattern, same thing. Okay, just put 1 pip below the lowest of the 3 patterns. Of this is the 2 patterns, 3 candles, the low of the 2 candles. Okay, so same thing over here. Okay, so like this. So just put here. These are the 3 candle patterns. So just put your stop loss over here. Let me change the color so you understand. Stop loss here, stop loss here, stop loss here, your stop loss over here. So for me, I keep things simple. If it's like Forex, I'll just do 1 pip, because if I'm wrong, I'm wrong. There's no such thing. I put extra 20, 30. Is that? But if you have done your research and you think that, you know, sometimes it take you up by 1 pip and it goes your way, you want to put 5, it's up to you. Most important thing, make sure your money management is okay. Okay, so for when gold and ether, I will put you can put the this one I've already corrected it already. It's not 20 but 10. Okay, this is 10. And then silver, you can do 5 cents as your stop loss. Natural gas, 10 cents. For Bitcoin, Nasdaq, and Hang Seng is 100. Crypto, 10 cents for single digits, double digits, $1, triple digits, and 4 digits, $10. Anything more than that, you do the 100. So these are my stop losses. Sorry about this. Yeah, this is correcting it to 10 over here. No problem. If you want not no, gold is not 10. Gold, I will do, sorry, gold here, I will do $1. $1 above and below the low, not 10. Okay, so I have to separate gold on its own. Luckily, I'm doing videos. Sometimes you just typing. So this is the stop loss for gold, $1 US. Below the low or above the high. For ether, you can do 10. Same with the S&P 500. Okay. And then when it comes to Nasdaq, all like this. So okay, so far, I think no problem, right? So anyway, no, if there is, we will always cover it in our next support videos, support sessions. So with that, I've come to the end. You have any questions? So even our future support sessions also, we will keep it very, very short like this. So everybody, you come in, I'll cover all these short topics, and then so you can learn very fast and then internalize it before we go to the next one. I don't want to do long hours, cover a few days and stuff like that. Short one, put the videos there, short one, put the video there, and then you want to watch it on YouTube, also easier. Yeah. So any more questions? So if there's none, yeah, okay, yeah, welcome guys, no problem. So you all enjoy this session, right? Hopefully it's helpful to you guys. We will continue doing this kind of support to support you guys as much as possible. If you have anything other ideas that you need, for us to like see, how to improve your entries, all these methods, leave the heavy lifting to me by telling you all the directions and the areas. Okay, so I'm helping you guys. So anything else that you need to improve your trading skills, let me know, and then I'll make it into this short sessions for you all. We'll probably meet, every time we meet, we'll probably meet it on Friday, like this time, like that, 2 days, or if there's a public holiday or whatnot, I'll just do these sessions and I'll put it up on YouTube for you guys. Okay, so wishing everybody a wonderful weekend, and talk to you all soon. Take care. Good night.